August 7th, 2025, Tokyo session, July, journal entry number 24. A lot to unpack here, a ton to unpack here. Let's have a look at this. A lot to unpack. So I'm going to start with two trades on the NASDAQ. I had two trades on the NASDAQ and two trades on yen futures. I had two wins, one loss, and one break-even trade. So the NASDAQ, pretty simple. I was looking at shorting this market on a very clean divergence with the S&P 500 taking out those 50-minute highs and the Nasdaq not taking out those 50-minute highs. So those 50-minute highs, were they really highs that I should have been trading? Of course they were. If you look at that, the line chart, they were right. I was shorting a very strong market, and neither the New York highs or New York lows were swept. So the New York highs were this at this level right here. We have 915 highs, and the New York lows were at this level. So same for the Nasdaq, New York lows, and New York highs at actually New York highs were here on the Nasdaq. If you remember, this morning I missed on those shorts on the S&P 500 on a very strong divergence here. So we were trading inside of the range still, and the New York range was very wide, was super wide. So I was looking for price failing above a clean 15-minute high, and I saw the S&P 500 liquidating those highs, and the Nasdaq failing to do so. So shorts were in play. Now, since the open, right here, where's the open? This is a 15-second chart. So at the open, on the Sydney session, everything was bullish, right? We opened very strong and then consolidating for the next leg up. So I missed that leg up because I was trading the Japanese yen at the Tokyo Open. This would have been a great setup, noting a pullback towards, I mean, the pullback on the Nasdaq liquidating those lows, and the S&P 500 also liquidated the lows right here. So not the cleanest price failure since we didn't have divergence, but still a very good setup that I missed, which is okay, I guess. So when I saw price moving higher, right, in a very clean bullish trend, inside of this bullish trend. And when I saw that divergence print with the S&P 500, I look for shorts below my money line, and of course, where the overall bullish trend was broken with. So, setup, very nice setup, a setup. Execution wise, let's have a look at that because the execution also was very good. I executed at on the 15-second chart, right, at the beginning of this candle right here. So I executed here and got filled on my last contract um, around this level. So my average entry was very nice below the money line. Now, execution wise, a plus two. But what I did wrong here was not taking profits on my shorts. Now I had four contracts short here on the Nasdaq with my stop losses above the divergence highs, and here is where I completely and utterly fucked up. I should have taken all of my trade at the next structure low, which I didn't. And when price started to come back up, right? And I noticed this very strong bullish candle, moved my stop losses to break even and got stopped out at break even on this trade, missing out on a ton of profits. So I was not yet done with the NASDAQ, and I executed 5 contracts shorts on a pullback towards that money line, right? That's another way that I play this failure, right? I move towards my money line. Normally, I don't take this trade because I use, price breaking or printing, in this case, below that money line, and taking my profits at the next structured low. But because I fucked up completely, I executed short 5 contracts here, took out 4 at the internal structured lows here, and the last one here at targets, which were the next structured low. Remember that because we broke with this structured low on my first trade, this was no long. Actually, my target was this new structured low right here. So yeah, management on my second position A, but the trade management on my first position was C. This means that um, I should have ended my session with this one trade on the Nasdaq, but because I missed it, and I had the possibility to execute again, you know, I I didn't double my risk because if this would have been a loss, the first trade would have been a loss, I wouldn't have executed this trade. But because I broke even, I still had, within my risk parameters, executing the next uh, setup that printed short. So not very happy about this at all. But then again, a very nice win. On the Japanese yen side, so the Japanese yen, I took 2 trades, and oh, let me see. Yeah, I took 2 trades on the Japanese yen. This was a very good setup. So I was hunting shorts on the Japanese yen on the liquidation of the New York highs right here. These were the New York highs. And right there at the open, Sydney, we liquidated. But price remained in a bullish structure. So um, right before the Tokyo Open, I executed shorts on a break of this low right here. Now, um, setup wise, C, setup wise, C. Why? Why was this a bad setup? Because the actual structure low was this one right here, the one that printed just below the New York lows. This one. If you see, that is the actual bullish structure. So what I did is that I used an internal low that um, that aligned perfectly with the break of the bullish trend. So I pushed this trade, or I pushed this execution towards executing outside my edge, because even though price did break with the overall bullish trend, the structure in this market was still very much bullish. So C, setup. Also, we were, I don't know, 10 minutes from the Tokyo Open, and the Tokyo Open brings the actual volume and gets very volatile, mostly on the Japanese yen and gold. So very poor thought process here, very poor execution, and of course, I got stopped out on the hunt on the Tokyo Open liquidation of those highs. So I was done with trading the Japanese yen on such a strong open Tokyo, but then price started to come down right here. Price started to come down. I had how many? I had 2 contracts on my first trade and 3 contracts on my second trade. Now, when the Japanese yen printed this bullish candle, this liquidation of those highs, and then printed this massive bearish candle, I entered short. I entered short. Let's see where the actual execution was, because this was a perfect execution right here. So my money line, I'm gonna place my money line actually. My money line where there's lows right here. Load, load. All right, so my money line were on these lows. Let's see, right there. Now, why was my money line on this low? And before I shouldn't have considered that a structure low. Well, because of this. This was the actual structure of the market, and this was, my friend, an internal low. And then this was the next low that pushed price higher, making that higher high. And that was the actual low that I should have waited for my entry, right? So execution, if you see here on the 15-second chart, we liquidated those lows and I entered right there at the close of that candle. So setup, this was the setup that I should have traded. A setup right here, a setup, boom, a plus setup. Execution also, perfect execution, no fear. And then targets, I exited two contracts right at the previous structure low, right here. So management perfect, and targets were at this 15-minute lows, or the you can see here this 15-minute low where my target got filled right here. Of course, I never put my target at the actual low structure lows. I put it a few ticks above to get filled. So this is the trade that I should have taken, and trade management also an A. So overall, 4 trades. That sounds like a lot. Um, and I'm going to go through that too. That sounds like a lot, but I led myself two losing trades per session. And I executed the Japanese yen trades first. So with the Japanese yen, I was on the green, right? Then I executed this one that broke even. So I still had, within my risk parameters, two possible trades that I could take. And this was my last one that also was a perfect execution. So overall, small green session, tough session, bad decisions overall on 2 trades, and perfect executions and discipline on the next 2.